Professor Powell, thank you so much for joining me today. So, first of all, we have learned that nearly half of the American business community in China ranked the country among their top 3 global investment destinations, even though the percentage naming China as their top investment target has been declined by 6%. So, what does this suggest about the enduring value of the Chinese market in the eyes of the global investors?
Look, the Chinese market has 3 very important features about it from the point of view of global investors. Firstly, of course, is that it is a large consumer market. Historically, it has been an important market for multinationals. There is still more room to grow. We've got another 400 million people to become middle class in China over the next 10 years. That's number one. Number two, of course, is that China has progressively become a very sophisticated manufacturing country with comprehensive supply chains, with all the raw materials and the labor capabilities. And so companies that are looking to manufacture sophisticated products will find China to be very attractive. And the competitive proposition that China offers is one that's very hard to turn back on. And thirdly, looking forward, China offers a growing depth in research and development in all the scientific and technological areas, from AI through to material sciences and things like that. So companies looking to go up the value path will also find China incredibly attractive.
Well, the report also notes that, 63% of surveyed American companies cite U.S. China tensions as their top challenge. Well, firms like Toyota are still announcing investment, like major investments in China's new energy vehicle sector, such as about $2 billion to build an electric vehicle plant in Shanghai. So does that mean that political tensions and external pressures have not shaken the fundamental attractiveness of the Chinese market?
Look, there's no doubt that the Chinese market is attractive. And for companies that are not American, it is a little bit easier for them to be making longer term decisions as far as China goes. If, however, you are an American company with significant exposure in the North American market, whether it's institutionally, politically, or whether you're listed on the stock exchange, or you have a parent company back in the United States, and of course you are going to come under incredible pressure in this current moment in time to be seen to be going along with the administration's broader strategic ambitions, which is to rejuvenate manufacturing in America and to some extent to decouple from China. So those companies will be trying to keep their head down, not say too much, hopefully weather the storm and see where things end up in 6 months or 12 months' time. So they're hoping that the uncertainty that exists today will eventually settle down and they will be able to make more rational, longer-term decisions once all of that has happened.
Well, does that suggest that some claims such as massive foreign capital exit from China is not actually true?
Well, capital will circulate. So many companies that have had mature presence in China continue to see China, particularly some of their well-established factories, selling into the middle class as cash cows. So they will naturally be repatriating some of those earnings and probably not reinvesting in the more labor-intensive end of their production systems. So we're going to see, I think, some of those earnings leave China, but at the same time, we will see new investments being made into China. And we are really witnessing, I think, a transformation in the nature of foreign investment in China, where we're no longer going to see massive commitments in areas which are particularly labor intensive. They are already leaving, but we will start to see a more sophisticated, higher quality investment in areas that are underpinned by technology and science and automation and artificial intelligence, all the way through to R&D. And that's a new chapter that is only just now beginning to open up.
Well, many experts have suggest that there are no winners in a tariff war. In the meantime, U.S. currently is imposing as high as 145% tariffs on Chinese goods. Yet some items still entering duty-free. So does this expose contradictions in America's trade policy? And how, what's your observations on Chinese manufacturing sectors, those companies break through this uncertainty?
Yeah, look, American trade policy since this administration took office has been characterized by confusion and uncertainty. The decisions that have been made in relation to tariffs, the escalation of tariffs, the suspension of tariffs, the modification of tariffs, where we're chopping and changing each and every day, really sends a very clear signal at the moment to the marketplace, and that is that trade policy is in a muddle. It is underpinned by all sorts of ambitions that are non-economic in nature, whether they are geopolitical ones or whether they are really ones aimed at signaling to the domestic political support base that the administration is doing something to bring manufacturing back. So very confused environment at the moment, a lot of instability for investors. How do we deal with that? Well, of course, there are ways in which companies work their way around tariffs. The more complicated the rules there are, the more clever people get in finding ways through, whether it's through transshipment, establishing new manufacturing or assembly facilities in other parts of the world. These are all the kinds of things that companies will, of course, seek to do. But it's one thing, but to do that, you've got to remember one thing, and that is, from China's point of view, the growth is actually in the markets of the global south. In 2024, China traded more with the BRI countries than it did with the advanced world, the G7 world, for the first time ever. So the growth is actually not in the United States relative to what's happening in the rest of the world.
Well, this week there is the big news, which is China has passed its first private economy law, signaling stronger legal support and long-term commitment to the private sector. So how might this new law help improve confidence among foreign investors, especially to American firms?
Look, it's an important move because it signals to the wider community of investors and managers of capital that China is, one, open for business, and two, mindful of the need to continually improve and mature its operating environment to deliver what is very important for businesses, and that is certainty. When you're making decisions around investing capital that need to have clarity over a 2, 3, 4, 5, or 10-year horizon, having a clear legal framework is absolutely fundamental to your confidence in making those kinds of decisions. This law sends a very powerful signal that China is listening to enterprises and is working all the time to improve the environment for investors to move forward with confidence.
The last question is about the future of China-U.S. relations. David Perdue, he was recently confirmed as the new U.S. ambassador to China, and he comes from a background of corporate leadership, and also he has previously served as a U.S. senator with strong opinions on trade and national security. So in your view, what impact his appointment might have on the future of China-U.S. economic relations, especially amid these ongoing trade tensions?
Look, he's on the record with some very strong views about China. He certainly sees China as an adversary of America, and in that regard, I think is a clear extension, if you will, of the general attitude, not only of this administration but also of the bipartisan position on Capitol Hill. So as an individual, I don't think we'll see particularly much from him that is outside of that broad ethos. The bigger issue is whether or not that general ecosystem or that general political direction coming out of the elite in Washington will change over time, and we will only have to wait and see. These attitudes towards China have taken decades to evolve. And at the moment, unfortunately, the American political elite see the world very much in zero-sum terms.
Well, let's wait and see how, under his leadership, how the China-U.S. relations navigates. Well, thank you so much, Professor Warwick Powell. It's a pleasure having you.
It's been great to be here.